There is a possible investment opportunity brewing. It is the kind of investment opportunity that you and I can take advantage of. I'm not an investment advisor. This is not investment advice. And it could be the deal of a lifetime. I'll tell you about it in a minute. The markets this week will be only interested in Powell's speeches and the PCE reports that are going to come out on Friday. Yeah, there's lots of other reports coming out this week. I'll talk to you about all of them just in a second here, but those two things, Powell's two speeches and what happens with the PCE on Friday, that is what's going to matter. Now, of course, lots of things can change. One of these reports can be crazy out of line for some reason, and that could make things different. But for now, that's what I will tell you is those are the two issues to watch for this week. The issue for Tesla, of course, is will it reverse the difficulties it was having last week and start heading back towards that 300 that we've been talking about? I've looked at a lot of technical analysis. Again, I'm telling you from my standpoint, the foundations, the fundamentals, everything's there. There's no reason it can't go back to 400. The markets are going to determine whether that can happen or not, meaning, in other words, the overall market sentiment is going to have a lot to do with whether Tesla goes back to 400. We need a continuous bull run to make that happen. Even to get to 300, we need the bull to continue, but I believe that is going to happen. And the other thing we need to happen is for Tesla to execute. So if we don't hit 300 this week, but if we have 460 produced, 460 sold, thereabouts this next Sunday, the following week, we will see our 300, I'm pretty sure. If not, might have to wait till earnings call, but then we'll see it if we hit that 460 plateau or higher. All right, this is Randy Kirk. If you like the Sunday night show, actually, it's one of the favorite shows out there, but maybe you don't like it anymore. Anyway, hit like if you do like it. The Sunday night show is where we talk about all things financial in the upcoming week. That precedes my Monday morning show, my brand new show that I do every morning now, where I give you the financial analysis and Tesla analysis just after the market opens. So if you'd like to be notified about that, then please hit notify. You have to hit subscribe before you can hit notify, buy the book, and sign up for Patreon. All right. Now, in a normal market, this week's reporting, which has housing, durable goods, consumer sentiment, personal income, all of those things will be very closely watched, and the market could move based on any of those because in a normal market, in a normal economy, those are the things that people care about is how is business doing? Is it booming? Is it going ahead? Is it going to even better than we think? Or is it starting to slow down? Those are the issues. But right now, nobody seems to care about anything. Everybody cares about inflation and interest rates. Well, the markets are implying by the low interest rates on 10-year bonds that inflation is over. There's not a lot of conversation about, most of the conversation about inflation is that the Fed's wrong about it. From all the articles that I'm reading, over and over and over again, people are talking about that inflation is over and that the Fed's wrong. But the market is going to continue. The average investor is going to, the person that pays attention is going to keep looking for evidence that, in fact, inflation is over and that it's not coming back. There's always a chance that inflation could raise its ugly head again. The markets also seem to believe that the Fed will not increase rates in July, but they aren't 100% sure. I think there's also a lot of sentiment that any rate increase is built in. It's already in the prices, and that if it's going to happen, it's not going to affect purchasing decisions very much at this point because, months ago, you were looking at 50 and 75 basis point increases every month, and that was having a major effect on the cost of whatever the thing a person was buying, whether that's a car, a house, durable goods, whatever, just credit card purchases. So, but now you raise it from, by 25 basis points in this market where the interest rates are already up, just doesn't have the same effect. So anyway, the market believes that there's at least a chance that there will be more increases. They believe there's also a chance there'll be decreases. Any evidence that it's going to be flatlining and or going down, the market, the bull will be enhanced. The bull will go even stronger. All right. I had two videos out yesterday with regard to the coup, the famous Russian coup. Well, that was a coulda, woulda, shoulda, I'm not sure, coup. Anyway, it's over. It's out of the news. It doesn't matter anymore. It's not going to have any effect tomorrow morning. Now, something I picked up as I was doing my research today is that you should keep your eye on corporate defaults and bankruptcies. I think that there's no chance that we're going to have a recession. I've stated it before. I have two reasons. I have a reason for and a reason against. Let's start with the reason against. You can't have a recession when you have jobs this strong and earnings going up this strongly. We'll talk about earnings later. And the folks have money in their jeans. The companies have monies in their pocket. So I just don't see where the recession is going to come from. However, the thing I've talked about also is that if money slows down, if the M2 continues downward and we don't have any multiplying effect in the money market, if money dries up, if people can't borrow or they can't borrow at rates that make sense for them in terms of profits, this could be a problem. Well, that's what's been showing up in corporate defaults and bankruptcies. Defaults are up about double what they were last year. Now, that's not a lot. We're talking about, I think, in the under 100. So let's say from 40 to 80 or something like that in terms of defaults. Bankruptcies are up significantly. They are up significantly, but from very low levels. But it's something to watch. So what you want to look for is, the amount that corporations are now paying for their debt has gone up from 4% to almost 8%, somewhere in the 7 to 9% range. Well, 5 years ago, it was a really, really good idea to have debt. You didn't want to offer equity out at a time when you could get corporate debt, get interest rates around 4%, sometimes even lower. I think some corporations were getting like 2.5 to 3. Well, there's always usually almost always, I love that phrase too. There's almost always going to be a time when that comes home to roost, and that's what happens. So some companies are offering equity now in order to pay off debt. There's a lot of ways you can get out of that particular predicament, including bankruptcy. So we'll see what happens, but that's something to watch. All right, what's going to happen this week on the indexes? All right, on Monday, there's nothing. Zip, zero, none. On Tuesday, we have durable goods orders. That'll be before the market opens, so I will be reporting on that in my Tuesday morning report. The markets are expecting a 0.9% drop versus a 1.1% increase last month. Let's call both of those like flat. So unless something, now this is the one that includes cars and transportation. So unless something dramatic happens, like a 3% increase or a 5% decrease, I mean, a 0.5 or a 5% decrease or a 3 or 4 or 5% increase, this is not going to affect markets. They're also looking at the durable goods minus transportation. Now, this is the one you might expect to be a little more affected right now, because are you going to go out and buy a washing machine or a dryer when interest rates are over 10%, maybe even over 20%, depending on your credit score? Right now, they're saying maybe no change. Last month, it was down 0.2%. So right now, no evidence anyway that the street sees that people are pulling back on durable goods. On Wednesday, or no, that's still Tuesday. Just a second. Let me be clear here. Well, I'm not going to be clear. So we also have the Case-Shiller. I think that's also on Tuesday. Home price index. They look at 20 cities and they give you some idea on housing. Look, I want to tell you a couple of things about housing. First of all, the home price index probably will be neutral to up. Housing prices are going up. It may not be showing yet in this Case-Shiller home price report, but they are going up. And here's what's going on. I mentioned this in another report the other day. I think it might have been yesterday afternoon. There is no inventory. It's lower. It's 40% lower than pre-pandemic. And in the pre-pandemic, the rates were extremely low. They were historic lows. Now, I know something about this category. I know that, I've written a couple of books on real estate. I've had clients in the real estate business now for 16 years. I've written hundreds and hundreds of blogs about the real estate market. I've paid attention to it for decades. So I'm not like just coming at this without knowing too much about it. I know a lot about this category. And what I'm telling you is the inventories were at ridiculous lows pre-pandemic. And right now, you could almost say there are no homes. There are no homes for sale. You'd almost be right. In this environment with these high interest rates, 40% of the homes that are on the market right now are being sold for over asking. People are getting multiple bids. It is crazy. Of course, it's season right now. You know, you have March to September, October, roughly a season, but there's just nothing to buy. And some people have to move. No matter what the market environment is, some people want to buy a home right now. And one of my mortgage consultant clients, he says, hey, you know what? Buy a home whenever. If you buy a home right now and you pay 6% mortgage, well, interest rates will probably come down and you can refi for 3%. Anyway, this is a time when the home prices are going up, but rents are not. So rents are down around 0 to 2% in terms of what they're going up, and seeing this month after month after month from every single report. All right. So be careful of stupid headlines that say sales are lower. House sales are crashing. House sales are much lower than last year. Well, yeah, they are. You can't sell. If there's nothing there to sell, there's no way you can sell. So those headlines, don't let those affect your thinking. All right. New home sales, those will be down. The street is saying that they think it'll be 675,000. I think it might be even lower. Last month it was 683, so 675 would be a slight drop. I think it could be even less than that. All right, we have the consumer confidence coming in also on Tuesday. The street is expecting consumer confidence to be up a little bit to 104 versus 102.3 last month. Well, you know, part of consumer confidence is inflation expectations. Inflation expectations are down, dramatically down. Part of it is job security. Well, right now there's tons of job security. Part is wages doing better than inflation. Well, that's been true for a couple of months too. So consumer confidence being slightly up, yeah, that makes sense, and the market is expecting it. Now, if it starts hitting numbers like 110, that could get a little scary in terms of the Fed's hopes and dreams. All right, Wednesday, 9:30 Eastern. That means 6:30 in the morning. I'm sorry, 9:30 Eastern. So this is after the market is open. I won't be able to report on this until Thursday. The Fed chairman is speaking. Anytime the Fed chairman speaks, be careful. So that's all that's happening on Wednesday. On Thursday, you also have another Fed speak. I don't think he'll change anything from Wednesday. Unlikely to have anything to report. On Thursday morning at 8:30, after the market opens, you have initial jobless claims. The street is only expecting 265 versus 264 last month. And a higher number here would be good in terms of what the Fed is hoping for. Some relief in the housing, in the labor market. The labor market's tight. It's not as tight as it was a year ago or 2 years ago. I can tell you that for sure, but it is still very, very tight. So the Fed would like to see that loosening up a little bit. At 265, there's no loosening. That's not going to be helpful. But it's not going to hurt. The market's not going to change based on that. Then same day, we've got pending home sales. Pending home sales, same thing. Same thing I've been talking about. Pending home sales. How can you have pending home sales when you have no homes to sell? All right, on Friday, this is the big day. This is when everything happens. So you have personal income reporting. Personal income, this will be May. The street is expecting that to be up 0.3% versus last month, 0.4%. I would think, based on a lot of stuff I'm reading right now, that maybe the personal income will be at least 0.3%, maybe a little stronger. But anyway, in that range, I doubt if it'll be much higher. And then personal spending is expected to go only up 0.2% versus last month, it went up 0.8%. 0.8% per month would be very hard to maintain, even in a good market. So this expected 0.2 is probably right. Okay, then the big one, the PCE. So the PCE index is the Fed's favorite inflation index. If you follow this channel, you know I've been talking about that for months and months. So you watch this PCE index, the street is expecting 0.3 versus 0.4 last month. Well, that would be good. If we get that, I think that'll be in line with Fed's expectations, but I think it would be enough to maybe create another pause, because 0.3 for year over year, they're saying year over year here would be 4.4, but actually 0.3 would suggest 0.365 year over year. Anyway, it's not enough to completely for the Fed to completely go into a dovish environment, but it might be enough to get them for another pause to see what the PCE would be the next couple of months. So anyway, but it might be less than this. Why do I say that? Oh, let me give you the rest of the stats first. Core PCE is expected to still be 4.4. That's the one that takes out housing and energy and food prices. So that's expected to be higher. That's also, it's a slightly lower than last month, but that would be a possible issue for the Fed if it's that high. So watch for that number as well. Why I'm saying about the inflation numbers being maybe even lower than this is expecting is because trueflation is now down to 2.4, which is the lowest yet. It's continuing to go down this month, and every single category is neutral to down. So this has to be showing up somewhere else in the Fed's analysis. You would think it might show up in PCE because PCE is a little closer to reality than the CPI. Anyway, maybe we'll see it in the CPI, which will also be out before the Fed has to make the decision next month. We also get the Chicago Business Barometer in June. For June, they're expecting 43 rating versus 40.4 last month. I have no idea whether that'll be good, bad, or indifferent. I don't think it'll have anything. But then consumer sentiment is the last thing, suggesting that consumer sentiment will still be showing at 64 versus last month, 63.9. So no real change. I think consumer sentiment will continue to move up nicely. All right. Are you hoping to invest in the next Tesla? No, this is not an advertisement. I know it sounds like an ad. It's not an ad. Are you hoping to invest in the next Tesla or the next Apple? Well, maybe that is going to be the promised IPO in a company we should all know a little bit about, which is Starlink. Well, yeah, we're all waiting for that, right? I guess. Are you waiting for the Starlink IPO? I'm waiting for the Starlink IPO. Well, Elon was asked about this the past week amid rumors like this one. I'm going to blow his name completely. I should know it. Chamath Palihapitiya. Anyway, he predicted in January that the Starlink IPO would happen in 2023, saying it would be the biggest deal of 2023. He expected that the IPO would be half of SpaceX. He didn't know at the time that SpaceX has now just done another private offering, valuing the company at $150 billion. So that would say half of that, they would be going out hoping at, say, $75 billion. Well, I would be a buyer of SpaceX at $75 billion. I don't know if you have been watching my conversations with Brian Wong, or if you bought the book, The Elon Musk Mission, which has at least 2 chapters on Starlink, which go into great detail about how big this company is going to be. Brian believes, I agree with Brian, that Starlink by itself, not SpaceX, Starlink by itself will be bigger than Apple. Let that sink in. Okay, so then Elon the other day was asked whether he would like to make any comment about a possible Starlink IPO, and he said it wouldn't be legal for me to speculate about such a move. And then he chuckled, his famous chuckle. Well, maybe we're still looking at a Starlink IPO later this year. That would certainly be interesting. Well, anyway, if you missed my conversation with Brian White this morning, I'm going to put a card right here so you can go back and look at that, because you want to see what Brian had to say about the Model 3. One of the things that Brian said about the Model 3 is, Randy, there is still a very, very large market for sedans. What we think of the market in the United States as being small for sedans because it's completely owned by the Japanese. But the market overall is very strong. So a great sedan, a great electric sedan, could be a big, big deal. He also talks about what he knows is going to be on the new updated Model 3. And he talks about when he thinks the Model 3 will be out. So anyway, take a look, see, check out that particular video from this morning. And then we'd love to see you, of course, in the morning with the morning show. I'll have another show or two tomorrow, of course, where you may want to be notified when these happen. So then you want to hit the notify button after you subscribe. And then love to have you be part of Patreon. That'd be fantastic. And thank you for all the Patreon folks. It is a huge help in my ability to be able to produce this show and to spend the amount of time that I do producing the show. All right. So that's it for today. It has been amazing. It's been great talking to you.